Well, good evening, everyone, and welcome to today's webinar, How We Created 3 Million in Value in Just 1 Week. Before we get into the details of tonight's webinar, this is our last webinar we've done in 2024. 2024 has been an incredible year for Break of Day Capital. I want to thank people who've tuned into our webinars in the past, our investors, people who are looking to invest with us, and my team. This has been a fantastic year overall for us, and we're very excited, not just for the past performance of 2024, but we're very excited about the future in 2025. So tonight's webinar, we're going to dig into, as I said, how we created 3 million in value in just 1 week. And we're going to also dig into our Break of Day Capital multifamily impact fund, and show you how if you invest into the fund today, your money's immediately worth more right off the bat. So this is a very unique opportunity, which we're very excited to go over in detail with you. So tonight, we're going to take questions at the conclusion of our webinar, but I do encourage you at any time you have a question, please go right ahead and type in the Q&A box on the bottom, not the chat box, but the Q&A box, and we'll answer all your questions at the end of this webinar. So always have to flash these on the screen, the confidentiality disclaimers, as well as a financial disclaimer, but not going to read it to you. And going to start off with our mission. You know, the mission statement's often something when people look at companies, they glance at, and I think the mission statement's quite important. You always want to invest with somebody whose values are aligned with yours. At Break of Day Capital, our mission is to provide passive investors with superior risk-adjusted returns with the highest level of transparency and fiduciary responsibility while improving the quality of life and community for our residents. We're shooting for a win-win situation. Obviously, we want our shareholders to do exceptionally well, but we want to create a community for our residents that they want to stay at and live at. And our residents historically stay at our properties longer than the national average. The average resident stay at our property is 34.8 months versus a national average of 27.5 months. Our core values are integrity, transparency, communication, diligence, and Kaizen. Kaizen is a Japanese in origin business term to continually look to improve oneself. Now, we always start off our presentation going over our team and leadership. If you've spoken to me in the past, you know, I always start off talking about the leadership, because when you invest in multifamily real estate, you're investing with the operator and their team first, the deal second. Gary Lipsky, he has been a real estate investor since 2002, has lots of experience. He has written 2 books, one called Best in Class, which is about asset management, which was an Amazon bestseller, and also Invest Smart, which is about spotting red flags with operators. Get the details about those 2 books in a little bit. And this is our team. My colleague Joe Fang and myself, we do investor relations. Timothy does our asset management and also does our underwriting. And my colleague Sean and Jacqueline run operations. And if you choose to invest with us, Jacqueline will take you through the process step by step. And our bios are online. Not going to get into the nitty-gritty about each of us. But if you do want to learn more about each member of our team, I highly recommend you go to our webpage where you'll see each of our individual bios. Now, I was telling you about Gary's 2 books, Best in Class and Invest Smart. Best in Class is about asset management. As you know, we like to say we literally wrote the book on asset management. Operators love to tell you about how many deals they've done, how much money they raise, but very few dig into the asset management part, how they create alpha for their investors. So in this book, he really talks about, you know, utilizing best practices, tracking KPIs, and how to continually implement improvements. That's what we do at Break of Day Capital. And Invest Smart, which was his second book that came out this year, that talks about how to spot red flags with operator, warning signs, questions to ask, and anything that would just immediately just, we say run away from certain deals and operators if they show any of these certain characteristics. Gary also has a weekly podcast called Invest Smart, Real Estate Investor Podcast. I encourage you to check that out wherever you get podcasts. You can subscribe to it. I've been a guest on it in the past a couple times. And what I love about it, he has great guests, and it's also on the shorter side. Some podcasts, they last for hours. This is a 20-minute podcast. It gets right to the point. So market expertise. At Break of Day Capital, we don't take the shotgun approach to deciding where to invest. We focus on just a few markets, specifically the Southwest. And this has allowed us to develop great expertise. And we've always prioritized quality over quantity. Before I was talking about, some people love to talk about number of deals, number of, capital, how much capital they've raised. We're focused on the quality. We would rather do fewer deals that offer investors higher returns than do several additional deals that might not be the situation. Right now, we currently own and operate 8 properties. That number is going to be bumped up to 9 when we close on our next deal in late January, early February. And we have done 4 full cycle exits in Arizona. And each case, we've exceeded projections, and I'll get in a later slide to show you the returns. And what's great about being an expert in a certain market is, in doing so, we've developed great relationships with local brokers and lenders. Brokers and lenders want to work with us because we get deals done. There's nothing worse for a broker and a lender too, if they work on a deal only for it to not close, largely because the team and the operator were inexperienced and we're not able to do so. So these brokers and lenders want to work with us. And we've also accumulated thousands of data points in the Southwest in these markets. So we're able to see things that somebody who's just taking a very broad approach to can miss. And I'm going to get in that too when I talk about how we created $3 million of value within 1 week. That's largely due to us being an expert in a market. Now, our strategy, best in class value add strategy. When the acronyms, we say the BEAM. So when we acquire property, branding. Our properties in Tucson, we've rebranded them all to Icon. Icon now is an established brand in Tucson. People who hear the name Icon next to a property know they're going to be living in a great property that's well maintained with great leadership. So we've rebranded all of our properties Icon at the street they're named after. Icon in Spanish Trail. Our newest one, Icon in Midvale. Now, when we acquire the property, we look to improvements in both the exterior and common areas. I talked about how our tenants stay at properties longer than the national average. And that's largely due to us creating an environment in a place where they want to live and take pride in. We also do the interior renovations. We do those as the unit turns is when we come and do any renovations that need to be done. And also we talked about, we've written the book on best in class management, asset management, and so management operations is one area that we really can see value add improvements. So we really implement great management and efficient operations for our properties. Now, in doing so, we've been able to increase NOI 40% within 12 months across several of our properties in our portfolio. Now, what this is translated to is a very tremendous gain for not just the property value, but also our investors. As properties offer value to the cap rate, which means the net operating income, how much money the property makes over the price. So let's say we purchase a property for $20 million, that's making $1 million of net operating income. So 1 million divided by 20 gets you to a 5% cap rate. Now, if we're able to boost the net operating income 40% within the first year, applying that 5% cap rate, that property is now worth, 28 million dollars. Now, as impressive and as great as a 40% improvement is, look at our investors. Let's say we raise $10 million to for the property, and now the property is worth 8 million more. 8 million over 10 million shows our investors are up 80%. So that's really our goal with our properties, is to implement this best in class value add strategy. So here are some of our historical highlights. The full 4 full cycle exits, the average IRR was 49.5%. I'm going to break that down a little bit further in a next slide, where I talk about the deals. Those of you who've spoken to me know I have a Wall Street background, and one term I used to love to say to people is, don't ever confuse genius for a bull market. In a bull market, anybody can look good. Let's talk about the challenging times, how well we did. And I'll get in that in a little bit. We've done over 300 million in real estate transactions. We have never had to issue a capital call. Capital calls when a deal is doing so poorly that you actually have to reach back out to investors and say, hey guys, the deal is doing poorly. We need you to give us additional capital, or we could lose this deal to the banks. We've done 2 adaptive reuse projects, and we've distributed over $23 million to date. Now, I was telling you about the full cycle performance, that it's important to talk to people about how well they've done in challenging times. And as I was getting at my Wall Street days, there's a lot of fund managers who used to love to say, hey, I was up 40% this year. Well, great. Market was up 39%. And those same people, when things got challenging, didn't know what they were doing. And in many cases, many of those people who were boasting about their one great year were out of business a couple of years later. Now, in our portfolio, the first 3 deals have done exceptionally well. But this was during a bull market. The whole period, as you can see, there's a projected and there's an actual numbers. The first 3 deals we expected to hold anywhere from 6 years to 5 years. And in all 3 cases, the actuals was 2 years or less. We were targeting an IRR of, respectively 14, 15, and 18%. We got them 31%, 50%, and 101% in those deals. Incredible results. But again, bull market. Let's talk about how we did in challenging times. Midtown and First, this deal we exited in May of this year. So interest rates were still quite high, and not a lot of deals were getting done. This property we're expecting to hold 5 years, 60 months, and we were targeting an 18% IRR, so an annual return, inflation adjusted of 18%. The actual number, we ended up holding it for 3.25 years, so 39 months, and we got our investors a 19% internal rate of return. And that's an incredible number. My colleague Joe Fang and myself, who work in investor relations here, we would love that number in a bull market. You get it for us in a bear market, we're ecstatic. So, as I said, doing your due diligence on the operator and team, you want to make sure they've done well in both bull markets and challenging times, and we certainly have. Now, get into what I talked about before, the impact funds. I'm going to dive into the case study, how your investment is already up from day one, and going to break down these numbers in further detail. And one thing that often, what I love about multifamily is diving into these numbers, and we're going to show you this, is how we create value. Unlike other investments, in multifamily, you can drive value by boosting the net operating income. And this got me thinking. If you saw my LinkedIn post about this webinar, I remember quoting Matthew McConaughey, in the movie Wolf of Wall Street. I love the Wall Street movies, all of them, Margin Call, Wolf of Wall Street, Boiler Room. But, Wolf of Wall Street, there's a great bit where Matthew McConaughey's having lunch with Leonardo DiCaprio, and he's telling him how the business works. And he lets out the bag right away. I don't know if a stock's going to go up, down, left, right, or in circles. And that's true. If you invest in the stock market, earnings could go up and the stock could still stay flat, or they could even go up and the stock could go down. There's a lot of things out of your control when you invest in the stock market versus multifamily, where the value is driven by the net operating income. That's how that properties are valued. So a good operator and team can drive this. And I'm going to get into that in this case study. This property, Icon and Spanish Trail, it's our first deal in the fund. And tomorrow is actually going to be our 1-year anniversary of owning this property. We purchased it for $33 million, and it's 256 units. And I'm going to show you how we drove value for this property. Now, here are just some pictures of the property. As you can see in the upper left-hand corner, that's where the property is well landscaped. It's got a great pool. It's 2 stories. Property's got great amenities for people for workforce housing, such as the gym you can see there. It's got laundry rooms, a great community center. Now, going back to what I mentioned about being experts in a market, we were able to capture something that a lot of or actually all the other operators missed. And that was the amount of value we could create for this property through water conservation. When we were doing the due diligence, we saw that the water bill was exceptionally high. If you're an operator sitting in an office in New York and you see this, you probably have to say, just high expenses and just pass. We know Arizona, we know the Southwest. So when we saw this, we saw something must be up. And we realized that toilets, showers, and the faucets were all very high usage. And by replacing them and adding aerators, we would be able to get the water usage down drastically. So the toilets were using 3.5 gallons of water per flush. The replacements would use 0.8. Showers were using 2.5 gallons of water per minute. Replacements would use 1.5 gallons. And aerating the faucets would also get that number down quite a bit. We initially forecasted that this would lead to a 50% reduction of water consumption, which would be $138,000 in savings, and boost the property value $2.76 million. Again, how does that $138,000 become $2.76 million? Applying that 5% cap rate. I divide $138,000 by 5%, you get to $2.76 million. Now, as I said, tomorrow is our 1-year anniversary of owning this property, and we have seen the impact. The water savings ran ahead of expectations. It's running at $156,000, and applying a 5% cap rate gets you to a boost of value of $3.1 million. And this boost in property valuation, we were able to complete it in a week. We ordered these showers, toilets, aerators. Once they were arrived, we put notices on the door, and this renovation was done within a week. So within 1 week's time, we were able to add $3.1 million of valuation. And other ways we were able to add value too was the payroll. The payroll was too high. It was inefficiently run. So we were able to reduce the payroll $60,000 with a much more efficient staffing model. And this has not been implemented yet, but pet fees were not being charged. Now, the 256 units, 107 have a pet in them currently. This number does fluctuate a little bit. But when the leases are renewed, we are going to start charging a $30 per month pet fee. Now, rounding that number to 100 units with a pet in them, that gets you to another $36,000 of annual income. And also these privacy fences. If you look at the picture on the right side, you can see the second story units have a nice balcony area. And the first floor units now have this nice little use of that sort of reddish privacy wall. When we acquired this property, those walls were not in place. It just opened up. And I remember when I first visited the property that the space was just open and not too many, if only probably only a handful were actually using this outdoor space, which was theirs because it just not feel private. It kind of felt like it opened up to the courtyard. So we've added these privacy walls. And the last time I visited the property, I noticed that almost every unit now is using the space. They either have a table, chairs, a barbecue. Their kids' bikes are there. They're using the space now. Now, like the pet rentals, when the units are, the leases are renewed, this is going to boost rent $75 a month, and it'll be captured over time. But all in, this should add $115,000 of annual income. So overall, looking at our results, as I said, tomorrow's our 1 year anniversary of closing this deal or closing on this property. The value has increased $5.1 million. Now you put 5.1 million over the amount of investors' capital of 17.55 million. That gets you to an unrealized gain of 29%. Gain will always be unrealized until it's sold. But as you can see, this property has a significant amount of value that's been created over a short period of time. And this is what a good operator team can do, is drive this value immediately. So the second deal in the fund is called, it was Cabo del Sol. We closed this deal last week. It's now going to be called Icon in Midvale. This property is 136 units. It's cash flowing immediately. That's what we like about this property, is providing great early returns for investors. We're purchasing this property at 35% below replacement cost. So there's already a deep value to this property. And there's a great potential to increase income and reduce expenses by improving management efficiency, replacing the poorly performing property manager. So this is the second deal in the fund, which we closed on last week. And this is a cash flow play. This deal is giving great cash flow to investors immediately. So here are just some pictures of this property. As you can see, it's got a very nice pool area. It's 3 stories. It's got a good gym, community center for investors. Now, the third deal in the fund, this one's called La Posada. This property is like Icon in Midvale or Cabo del Sol. It's 136 units. Like Icon in Midvale or Cabo del Sol, it's got a great unit mix. Of the 136 units, 78% of them are 2 and 3 bedroom. The precise breakdown is 80 or 3 bedroom, 30 or 2 bedroom, and 26 and 1 bedroom. Why is that good? Larger bedroom, when there's 2 and 3 bedrooms, are in higher demand and easier to lease up. Families, blue collar families need these units. And as we mentioned, workforce housing is not being built. So these are much higher demand than the 1 bedrooms. This is an institutional grade class B plus property. It's our 11th deal in Tucson. And like the previous deal we mentioned, this deal is cash flowing in year 1. So it's giving great early returns to our investors. So here's some pictures of this property. As you can see, it's 2 stories. It's got a pool area. We're going to make the pool area much more resort-like. We're going to add pergolas, give it a little bit more shade, add a little barbecue area. And that lower right-hand picture is it's called a community center where people can hang out, they can have parties, play games. And it's almost identical to the Icon in Midvale or the Cabo del Sol community center for the property. So the investment classes. If you choose to invest with Break of Day Capital, we offer you three different investment options. The Class A, which we call the preferred equity, this is a great option if your main focus is distributions and cash flow. If you were to invest, we're going to use a minimum of 100,000, you get a preferred return of 10%. That money will be paid out, distributed to you on a monthly basis. And a 10% return, that beats the stock market. Stock market's historically about 9% on it. So this gives you a great return without the stock market volatility and a great option if your main focus is you want, cash flow and monthly distributions. When the deal is exited, though, you just get your principal back and there's no upside from the deal itself. So this is, I best describe this as owning a bond that gives you a 10% annual return with a monthly distribution. Now, the Class B common equity, this class gives you a 7% preferred return. Now, I always want to make clear to people that a 7% preferred return for the common equity does not mean you're going to get 7% return. But what happened with the best way to describe that is when the deal is exited, you get paid first. So that 7% preferred return must be made whole when the deal is exited before there's a profit share. So let's say we sell this deal in 5 years' time. $100,000 back to you. The preferred return of 7% on 100,000 would be 35,000. 7 times 5 would give you 35,000. If we've only paid you $25,000 of distribution, we must make up the difference next. Once that difference is made up, then comes the profit share known as the waterfall. The waterfall for investments are 70-30 split, 70% to the investors, 30% to Break of Day Capital, until a 15% IRR is achieved. After that's a 50-50 split. Distributions are paid quarterly, and this fund gives you great bonus appreciation. Bonus appreciation, we're going to give you 20% in 2024, 2025, and 2026. Now, for those of you who are not familiar with bonus appreciation, it is a tremendous tax benefit that you get in real estate, especially multifamily. So what we do is when we acquire a property, we have an engineer CPA visit the property, and everything that can be depreciated 15 years or less, we depreciate the first year. So this then shows up on your K1 as bonus appreciation. We pass it along to our investors. And what's great about bonus appreciation is it does not expire, and it can be used to offset any passive income you get. So not just dividends or distributions from our deals. If you have a rental property that you rent out, if you have a passive stake in a restaurant or franchise, any passive income you get, you can use it towards offsetting the taxes on those. And all in the average annual return we expect for the multifamily impact fund is 18%. We do have the Class C, which is the institutional class. This is for people who invest more money. And in that case, preferred return is bumped up to 8%. The waterfall is an 80-20 split. Distributions paid quarterly. Same amount of bonus appreciation. But the average annual return gets bumped up to 20%. So a great question asked frequently is why invest in the Break of Day Capital Multifamily Impact Fund? These are the 5 things that really stick out to me, starting with the trusted operator. As I mentioned, if you've spoken to me in the past, you know that I always talk about our operator team first, the deal second. You're investing with Break of Day, you're investing with a trusted operator. We have stringent acquisition criteria. When you underwrite our deals very conservatively, and we have a track record of success, and that track record shows you our performance in both good markets and challenging markets. If you invest in the Break of Day Capital Impact Fund, you're getting diversification. Your money is diversified over a few deals. There's also efficiency. In our fund, you get a single subscription agreement. And on your K1, you get everything is just on the one K1. So you don't have to deal with multiple tax documents. Everything is kept on the single schedule K1 for your for your taxes. Capital preservation. What's great about investing into a hard asset is multifamily is a great inflation hedge and it's recession resistant. People need shelter. Multifamily is done well in challenging times. And as I mentioned before, the tax benefits. We do the cost segregation on a property and we pass those tax benefits along to our investors. Now, why is it a smart move to invest now? Now, what's great about if you invest today is you already have seen the proven growth. We know that 1 year in Spanish Trail is doing exceptionally well. So a great analogy for this is it's like buying a stock after it's had very strong earnings. There's still future upside, but you've seen how well it's done so far. And also too, it's de-risked. Now, if you invest in something early on, you don't know what's going to happen. Now, we already know that Spanish Trail, the operational improvements have happened. We were able to reduce the water usage. We've added the privacy walls have been put in place, and we have a clear path in the future too. So the investment's been de-risked, and also now there's a future upside. We've now added, one additional deal, and another one's coming on pretty soon. And these are great cash flow plays. So you're set up for future gains as well. Now, when I started off this webinar, I told you that, one thing that I love about the Break a Day Capital Multifamily Impact Fund is if you invest in it today, your investment's already will be worth more immediately. That is rare to see. But if you invest $100,000 into our impact fund, it's worth $106,000. You don't see that often with investments. And I'm going to break this down of how that happens. Now, first of all, because this fund has been open for a year now, there is a 2% per quarter premium. You do have to pay, but that does not matter because even after the premium, your investment is worth more right off the bat. Now, I'm going to break this down for you because I'll show you how that's possible. Now, if you invest into the impact fund, your money's going to be diversified as follows over the three deals. 52% towards Icon of Spanish Trail, 16% towards Icon on Midvale, and 32% towards Icon on Headley. Now, if you're wondering why these distributions pan out this way, it's because when we were doing the capital raises for these deals, the people that allocated money towards the fund instead of the deal makes these numbers work out that way. So now, if you take that $92,000, so factoring the premium, and you multiply the 52% allocation towards Spanish Trail, of your investment, $47,840 will go towards Spanish Trail. 16% goes towards Icon and Midvale. So doing the math there, you get to $14,720. Icon and Headley at a 32% allocation gets you to $29,440 towards Icon on Headley. Now we know Spanish Trail is up 29% today. So your allocation towards Spanish Trail of $47,840, you multiply that by 1.29 to show you the 29% improvement, and that gets you to $61,714. So let's do the math here. With your investment in Spanish Trail worth $16,714, Icon and Midvale worth $14,720, Icon and Headley $29,440, your total investment Day one, if you invest $100,000, it is worth $106,000. That's incredible. You don't see that. That's people. There's a lot of terms for that. Positive arbitrage, but that's just you don't see that. I mean, I'm excited to share this with you because this is just such a good investment opportunity. So I'm just going to go over to the next slide. So what's the difference between investing now and later? Now, I told you that there is this 2% per quarter premium you do have to pay. And this is largely just fairness, because if somebody invested a year ago in Spanish Trail in the fund, they did not see any proven results. They were taking a bigger risk. But now we know this is doing quite well. So it's very standard for private equity to charge at 2% per quarter. But as I mentioned, your investment's already worth significantly more. But also important that I'm encouraging you to invest now, not wait. Do it this month, because if you don't do it by the end of December, the premium does tick up 2 more percentage points in January 2025, because all of a sudden a new quarter has begun. So if you like everything you've heard tonight and want to make money, want your investment to be marked up that quickly, you got to do it soon, because we're going to there's not too many more days left in this month, and January the premium ticks up 2 percentage points. So just to recap, Break of Day Capital, why invest with us? We mentioned that we focus on a few select markets, and this allows us to develop a deep expertise, and we always prioritize quality over quantity. We have literally wrote the book on asset management, and we've been able to demonstrate our leadership in the field through our results. And one thing I think is very important too is communications. That we talked about our core values. Transparency is one of them. And if you invest with us, pardon me, I'm losing my voice here. If you invest with us, you get a monthly newsletter on how the fund or each property specifically is doing. So you're kept in the loop. These monthly newsletters shows you how the property is doing that month, the actuals, the pro forma, the variance, and then it shows you from the day when the property closed, the inception of date, actuals, pro forma, variance. And we keep you informed of both the successes and the challenges. If a challenge does arise, you're aware of it, but more importantly, you're aware of how we're going to address it. We're going to fix any issues that arise. So you're kept in the loop with these monthly newsletters, and we also keep you in the loop with our financial documents. On a quarterly basis, we upload those to the investor portal, so you're kept in the loop with how our deals are doing. And just to wrap it all up, we create alpha. We exceed projections, and we see things other people miss. So we create alpha for our investors. So we're going to open up to questions, and I encourage, as I mentioned, you type it into the Q&A box, and I'll get to them. But next steps, if you do want to invest with us, you go to our portal, our investor portal. You'll see it on our webpage, Break of Day Capital, in the upper right-hand corner. There's also now and then you'll see like Invest Now button on our webpage. But you go to the investor portal. That's where you'll find our documents. And you follow the e-sign instructions to sign all the documents. And once you've done that, we send you wire instructions. You wire the money, and then you are an investor with us and part of our team. So that's a process. If you are looking to invest, though, I do encourage you to contact me. Send me an email. You can see it right there under my picture, adam@breakofdaycapital.com. I encourage you to do that just so I'm aware, and can certainly help. Jacqueline and myself will help you through the process. And you can also always call or text me at that number there as well, 602-529-2056. As the investor relations manager, I get back to people, worst case by the end of the day, but I try to get back to you within the hour that you reach out to me. So those are the next steps to invest. And as I mentioned earlier in the presentation tonight, that if you do want to invest in the impact fund, I do encourage you to do it ASAP, because we know that your investment's already worth more. And if you do wait to January, there is another, your investment will still be up, but there's another 2% premium that would have to be paid. So you should definitely do it now if you are leaning towards investing into the Brigadier Capital Multifamily Impact Fund. So with that, going to answer questions. As I said, type it in the Q&A box, and don't be shy. I'm here to answer your questions. I want you to be excited and comfortable to invest with us, and we do that by answering your questions. And we can always also schedule time to talk some more as well. And you can reach out to me via email. And you also on our webpage, you can book a time as well to talk to me. Okay, so question is, how is my investment worth more if I'm paying 8% a year premium? Well, it's not an 8% a year premium. What you're paying is a one-time premium of 2% per quarter. So as I showed you on that one page, that if you invest today, your $100,000 is marked at 92,000. But the good news is the way the allocation works and the way your money's divided over all three deals, that your $100,000 is worth $106,000 immediately. So you don't, it's not an 8% a year, it's a one-time only per quarter premium. And as I mentioned, if you invest today already, your investment is worth more than the initial investment. Next question is, does interest rate lowering affect the upside? The answer there is yes. Historically, when interest rates are lower, real estate does do better. We'll have to see over time if cap rates do compress. But historically, yes, a lower interest rate environment, real estate has done better. So with the Fed's action, certainly, and expect to continue action, certainly should help real estate in the long term. So going to give it a minute, but please, as I said, type, ask your questions, and if your questions were not asked tonight, you can certainly call me, and you can also always send me an email. I also can be text at that number too. That's not just a call number. That number goes to my cell phone, so you can call or text me at that number if anything, if you have any questions or want to schedule time to talk some more. Okay, well, question just came in. Okay. Thank you too. Somebody just wrote a thank you for tonight's webinar. I want to thank you for participating. So if you don't have any more questions, as I mentioned before, you can certainly email me or text me at adam@breakofdaycapital.com. And you can always call or text me at that number, 602-529-2056. We can certainly set up additional time to talk. It's been a great year at Breaker Day Capital. As I mentioned, this is our last webinar of the year. We've held several series, and we're very excited about 2025 and what we have planned for the future. I wish everybody a wonderful holiday season. Be safe, have a wonderful time with your families. And as I mentioned, again, reach out to me if you have any questions. Wish everybody the best. Looking forward to 2025.